CBDCs, in part reflecting different kinds of national values. And here the BIS is going to sit at the middle of it all, trying to think about questions that you're grappling with of interoperability and how exactly would a world of multiple CBDCs sort of operate from both the standpoints of financial stability and from a monetary perspective. I mean, how do you go about thinking about interoperability, even where you may not know the very specifics as to the designs of any sort of CBDC that may be in the making?
So it's clearly not an easy question you're asking, but let me first say that I fully concur with Chris and with you when you say that that CBDC will be a matter of national preferences. It will be a matter of national taste, and there will be different CBDCs, and that's because it's fundamentally a sovereign decision. Which is also why some of the concerns we can hear about the international spillovers of CBDC are, in my view, a little bit overblown, because CBDC projects are primarily for domestic purpose. Parliaments are not very excited by international matters usually. They really focused on what is good for their citizens, and rightly so. So these are fundamentally domestic projects. And so you might ask, why is the BIS role there? And if CBDC is a matter of national taste, why should central banks work together, right? Well, first, they can pool resources, and that can save a lot of time. And that's a little bit what we've started to do in this report, which we've been mentioning, trying to work together to advance faster. And that's exactly what the BIS Innovation Hub is meant to do. Pooling resources, to have joint experiments, so that you don't have to duplicate resources, and you can move faster. And second, there are issues related to the way the system works as a system. And I think we all agree that the well-functioning international monetary system and international financial system is key for global prosperity. It's key for growth, and that's where interoperability kicks in. Now, interoperability is a little bit of a catch-all word. I mean, it can mean different things. It could mean that CBDC platforms in different countries are connected. It could mean that CBDC platforms are built on common standards, so that private operators, private players can access them. And that's very important, because as Cecilia rightly said, we need private players, we need payment service providers to be active using CBDC and connecting different places nationally and internationally. And that could also mean that end users could use multiple CBDCs in the same wallet, for instance. So these are different meanings for the same word, which is interoperability, and there are different technical answers. And that can also mean that countries' jurisdictions will be connected through their traditional payment system, RTGS systems. And if you have a good way to connect different RTGS systems in different places, and then CBDC is settled in the RTGS system, that's also a nice way to interconnect CBDCs. So you see there are different ways to do it, and that's why the discussion on CBDC is very, very closely linked to the broader discussion on cross-border payments, which John is leading for the G20 under the G20 action plan. It's one part of this broader discussion on cross-border payments.
Yeah, just that in and of itself, you know, from being in the United States, where we have sort of parallel conversations going on in terms of our RTGS systems, not to mention sort of larger conversations on a CBDC, it makes that kind of balancing act really interesting. And I think we may return to that shortly. But you know, when you talk about interoperability, Cecilia, and you think about, well, let's talk about a more ambitious form of interoperability. You may, I'm sure, be familiar with some of the concerns people have about CBDCs, particularly from countries that have very large GDPs on a global basis, and the relationship of a CBDC vis-a-vis other kinds of countries. particularly about the transmission of monetary policy internationally. And then there are some real concerns that CBDCs could create not only monetary problems, but also sort of either political or financial ones, to the extent to which money creation is effectively shifted entirely to central banks from the commercial banks. Is this something that's kind of come across your radar? Do you think that these concerns are overblown? And from a policy standpoint, how do you go about kicking the tires, if that's the right metaphor, of a CBDC project to help diminish both the risks that are perceived and the concerns?
Well, there were a number of questions in that questions, but let me start with the saying yes. We have all these questions. I've spent several rounds around the globe before the pandemic hit us all, discussing this issue. So I'm familiar with them, and they're all very good questions. And if I start with the national arena. And this idea of a CBDC sort of taking over everything and would harm the banking system. Well, first of all, we have to remember history here, that central bank money in the form of cash and commercial bank money in the form of accounts have been working side by side for the best part of 150 years. So this is not a new thing. This is just technology changing, and we have to make decisions on how to adopt to that technology change. And over time, deposit money has become more and more available as making payments. And one of the ideas from the report that Benoit and John shared that we talked about, and it was launched just recently, is the sort of the do no harm principle, that we need to meet our historical role, making payments safe and efficient, but also meet our other objectives, which is financial stability and monetary stability. That's why we are conducting monetary policy. Now, as technology changes and the sort of the national borders here becomes a bit more blurry in this area, I think it's important to remember that, first of all, money is a competitive industry. If you look at history, it's really something attractive to have the rights to issue money. It's like an endless loan where you pay no interest. So of course it's attractive, and that's why governments sort of traditionally regulated it. On the other hand, the payments, but you can't. Sometimes when people talk about CBDC, they only talk about CBDC, but you can't really talk about it without talking about the whole system. And money and making payments are, they're very intricate. And the payment system is, you might think it is also competitive, but if you think about it, it's actually not a very competitive market at all. It has strong network effects. So just for instance, most people doesn't carry around one card for each shop they go in. They use one or two, and that's why we have MasterCard and Visa and the likes that are global players. So when you think about CBDC, and you get the question, I get the question, what is the purpose? You can try flipping the question and say instead, what is the situation that we don't like and the CBDC could help us to avoid? Well, it would help us, depending on design again, it could help us to avoid a number of unpleasant situations. And one is that small countries, such as my own, sort of lose control over what I would like to call the monetary sovereignty of a country, meaning that if other countries are making more efficient, more up to leveled up the game with and take over, you can get something which has been called a digital dollarization of countries, which a number of countries wouldn't like to have. And that brings me into my last comment about this, which is how do you design the system on a global scale? And That's hard, and I think some countries, and it doesn't necessarily have to be advanced economies. I find it much more plausible that there will be smaller countries which really have financial inclusion problems, that they will start this, because they don't really stand to lose as much as big advanced economies if things goes and you have to adjust the system a little bit on the way. And then other countries will learn from that and pick up, and there will be national deviations, but along the line we will sort of put the systems together, and more countries will probably latch onto it. And I think in about sort of 50, 100 years from now, people will go back to debates like this and said they were really worried about a number of things. They were worried about the wrong things, but I think I'm optimistic that we will get there in the end.
So there's a very famous clip in the United States when Bill Gates was first trying to describe the internet to a very famous comedian, David Letterman. So I guess you're sort of saying we'll have this, maybe they'll be looking at this clip and saying, wow, there are many people very concerned about CBDCs. Well, John, I mean, do you have, or do you share that kind of optimism, particularly, when you look at the transmission of monetary policy and the relationship to sort of how the introduction of a CBDC could impact lending with domestic banks. I've heard certainly from many financial institutions and many banks who, where people have expressed some concern that it can not only impact their business, but really sort of shift lending and the money creation role out of the commercial banks and sort of move the balance of power to central banks. Is this something that you've thought about as a realistic concern, or is it just sort of an overhyped concern? And especially when you think back and you get back to your original sort of driver, which is the disappearance of cash, right? So if you start to see a disappearance of cash and you see the introduction of a CBDC, and then depending on the design features of that CBDC, if you see more of the sort of literally financial power migrating to the central bank, is this a kind of a disaster scenario, or is this something that warrants considerable thought?
So I think I'd say it's a real issue, but you shouldn't blow it out of proportion. I mean, what we've been talking about, as you say, is a retail payments-based CBDC, not a CBDC for monetary policy purposes, and also a CBDC that would exist with other forms of money, commercial money, maybe private sector digital money, properly regulated. And I know you had a discussion earlier on about stablecoin. The key thing is we don't know the behavioral response of people to a central bank retail currency, digital currency. We don't know whether they'll want to keep all of the money they currently keep in commercial bank deposits for transactional purposes in it, or whether they'll want to keep some in it and maintain their normal retail accounts. It's possible that you might need features within a CBDC, going back to that foundational principle of the report. A number of people have mentioned do no harm, and do no harm to monetary stability and financial stability. It might be that you would need some features, to ensure that it wouldn't destabilize or cause problems for the monetary policy transmission mechanism. But at the moment, I don't see that as necessarily the main danger, or potentially a likely danger. And on this question of financial stability, a number of people have alluded to the problem you might have with bank runs. People could run very quickly to a digital central bank currency, or even just the disintermediation of the banking system more generally. Again, I think we live with those issues now. I mean, we live with those issues in terms of physical cash. We have mechanisms to prevent bank runs and to deal with them when they occur. It may be that a CBDC, will need some additional features to deal with that, and that might mean restrictions. But actually, in the UK, certainly, if you walk into your bank with a huge amount of cash and want to deposit it, you might find there are some restrictions. And if you want to make a very large payment, even as a central banker, you get asked some fairly probing questions. So we live with restrictions and some would say controls on the way we use money now. I don't think it's impossible to design a CBDC that wouldn't be able to deal with that. And I think that just say that the issue is, again, to start with what you want to achieve and then see how you deliver the do no harm, rather than start with the things it might do. And it may be we have to start small, and as we learn about the behavioral response of people to having this asset, to go further. If I can make just one last point, talked about the balance of power between central banks and commercial banks, which obviously we're all fascinated by. But it's not that long ago, and actually I could even remember it, when if I wanted to use a credit card, somebody rolled a roller over a piece of paper with 4 sheets of carbon to do that. And I couldn't use a credit card to buy my coffee. And sometimes I couldn't use a check below £30, which was a much higher value in those days than it is today. The balance of power, if you like, what we see now in the use of commercial backed money in everyday life is just a huge shift that's occurred over the last 25 years. And these things move backwards and forwards. There is no, the book of Genesis didn't have within it a division between central banks and commercial banks. It evolves with technology and it will continue to evolve. We have to ensure it evolves in a way that meets our public policy objectives.
Well, I can say that you have now thoroughly done something that I had not anticipated, which was introducing theology into the central bank digital currency debate. Chris, I think that Giancarlo, I think that one of the interesting conversations here, I mean, the United States, the way in which we sort of oversee our financial system, our monetary system is quite interesting because we have obviously the Fed board and then we have the regional banks. And then even added to that, we have a very active and a very large sort of banking system. Even as chairman of the CFTC, you had talked a good deal about what an ideal sort of interaction would be in order to tackle some of the design questions, even once the government sort of creates or articulates what kind of values it would have. We were talking to Mark Branson, who had laid out sort of how he thinks about that kind of coordination between, in the case of the Libra Association, but also other cryptocurrency founders and technologists, sort of the ideal relationship between the state and different sort of cryptocurrency actors. When it comes to the CBDC question, how do you see that playing out in an American context in a more fragmented monetary system?
We talked about values, and John actually talked about the book Genesis, and that comes back to what I began the conversation with, and that is that, how does society enshrine its social values into its money? And in fact, another conversation I had with John not too long ago, he said, it seems like every several generations, society asks the same question again: what is money? And I think we're at one of those points in time because of this new technological revolution in terms of the internet of value and the digitization of things of value, that we're once again asking the question, what is money? And it's not just central banks that are asking the question. Society at large is asking the question. In fact, we can think back 10 years, it was really Bitcoin that really started us down this road. And then it was other things like the pandemic, like China, and like Libra coin that have gotten all of us. And so I think there's a broad conversation going on right now that's not confined to the official sector. I think it's very much an official sector, public sector conversation. And so one of the things we're trying to do in the States at the Digital Dollar Project is bring together the conversations that are taking place in the official sector and the work that's being done in the private sector so they can benefit from each other. And in fact, that approach is consistent with the American tradition of the way we explored the lunar surface. It's consistent with the way the internet was developed with the DoD and DERPA, but also with the private sector actively involved in the development of the internet. And I think that as the United States goes forward in looking at a central bank digital currency, it's going to engage more directly with the private sector. And we at the Digital Dollar Project just last week put forward our proposals for a series of pilot programs that we think can explore both the retail use of this, but also wholesale use of this in different use cases. And I commend your viewers to take a look at that. It's on our website, digitaldollarproject.org. And we ourselves at the Digital Dollar Project in the next few weeks will be announcing a project that we're going to work on to start experimentation in this area. And we've been engaged with the official sector throughout, with the Federal Reserve Bank and with Treasury and other government agencies, because we want to really see this very rich communication between the private sector and the public sector. And I'll just end on this note. You know, I mentioned that's a US tradition, but if you look around the world, that's what's happening in most of the other projects as well. Certainly China is engaged very much with its commercial actors in the development of their DEP. And I think that that's very much the way that this will continue to develop in the United States.
Yeah, you know, we only have a couple of minutes, but Chris brought up the big issue out there with China and particularly with their involvement with their CBDC project. You know, very briefly, I would like to get each of your sort of your opinions about whether or not, number one, how do you view this project in terms of how advanced it seems, and then what do you think it's doing to the conversation on CBDCs domestically for other countries that are looking about their own values and also thinking through what kind of money and monetary system they would like to have? We'll go in reverse order this time. Since you brought it up, Christian and Carlo, we'll start with you.
Well, you know, I actually think that if you categorize, as you often see in the press, the development of CBDC as a race, then they'll often talk about China's advanced start and obviously Sweden as well, but they've defined it in terms of who goes first. I actually think that's the wrong way to look at this. I don't think if there's a winner, I don't think the winner is necessarily who's first and the loser is necessarily who's last. What matters is which central bank successfully incorporates its societal values in a successful development of CBDC. So it's not a question of going first, not a question of going last, but it's a question of success in making sure that a CBDC has those values associated with it. And that's our focus in the US. Now, on the other hand, one can't be too late to the game here. And that's why we very much advocate that, at least in the US context, that the United States really get in the game and get active in the game in a way that it is increasingly, but perhaps it wasn't as much 6 months ago. So we're very pleased to see the United States accelerate its work in this because of interoperability. The last thing the world needs is for the United States to not be engaged and then wake up 3 years from now and suddenly say, oh, we are going to engage. And oh, by the way, we want to go in a different technological direction. We're going to not be concerned with some of the interoperability aspects. So the United States needs to be engaged now. But ultimately, it's about incorporating those values into a successful deployment of CBDC.
Cecilia, China, 30 seconds.
I think it's just a very excellent example of how a digitalized economy makes us all have to ask how we serve societal needs in the best possible way. This is digitalization that changes people's behaviors, changing the landscape of the monetary system. China seems to be on the forefront. We also have to do our homework in terms of cash disappearing rapidly. And we're just going to have to carry on. And it's going to have to be quite a rebuilding of the infrastructure and a little bit of a change between public influence and private sector influence before we get it where we want it to be.
John?
Yeah, so first of all, I agree entirely with Chris that the wrong way to look at this is to feel this is some form of race. And the Chinese actually were the first, I think, with paper money. So maybe they'll be the first with a digital currency. The key is whether you can meet your societal needs and your economic needs and find a way to reflect that. And I think given the way the world is and national jurisdictions operate, this will be first and foremost a set of domestic issues. Where we have a real opportunity, though, is unlike other periods of change in money and development of national infrastructure for payments, we actually have the opportunity now to ensure that we don't build in unintended barriers to interoperability in all the forms that Benoit discussed, and where we choose to limit interoperability, that's an actual choice we make, rather than, as what's happened in the past, our systems have evolved, and it's just been very difficult to achieve some of the gains we could get through managed and responsible interoperability. So I really think we have an opportunity, but you start from how do you deal with the needs in your own society and your own economy, while trying to be aware of what you do to make sure you retain the optionality on interoperability.
Well, our time is up, but I'll let Benoit have the very last word.
Well, I would also agree that it's not a matter of competition with China. So if you have a hammer, everything looks like a nail. So if you want to pick a fight with China, you can pick a fight on CBDC, but it's not about CBDC. It's something different. And when we discuss international cooperation over CBDC at the BIS in Basel, PBOC is very much part of it. And we have a very good and intense discussions and relations with CBDC. And when you look at the DCEP project in China, it's primarily a domestic project. It's not a geopolitical project. And the way I would say it is that they have these big tech players, which are becoming fintech players or big tech in finance, with huge networks, and they want to be on top of it. The authorities want to remain on top of it, and authorities want to be sure that digital currency, whichever way it is being done, serves public objectives in China. And that it's the same conversation everywhere. The objectives might be different, obviously, but the kind of conversation will be the same everywhere. And so there are lots of lessons to learn from their experience.
Well, thank you so very, very much. I mean, that topic in and of itself, I know is a big one when against the backdrop of the internationalization of the yuan and the like, but thank you so very much. This kind of conversation is vital. It's necessary, and just having you here for our audience is what DC FinTech Week is about, and I appreciate all of your time to come. You have been wonderful, both on camera and off with me, and I just wanted to thank you again for making the time. And I guess we will now be switching to our next panel. But before we do, we're about to make this jump now from CBDCs to non-governmental currencies and what they mean for the market. But before we do, I want to introduce our poll for the day. So shout out to Chainalysis for the support. The question is, for the audience, what, if anything, is stopping you from investing in cryptocurrency? Not CBDC, in cryptocurrency. And you can go to slido.com to input your opinion with the code DC FinTech. And we will, again, DC FINTECH, and we'll provide the results for those who do. And with this audience, I'm pretty sure there will be more than a little curiosity. And with that, we are going to continue our conversation with one of the big draws of the day, Brad Garlinghouse. Now, Brad is, as many of our viewers know, the CEO of Ripple, and he is an alum of DC FinTech Week, where he wowed the audience in 2019 and was very, very popular. So I'm delighted to have the opportunity to get his views on not only our earlier conversation on CBDCs, but also the evolving regulatory environment more generally for cryptocurrencies and for blockchain projects. Brad, thank you so much for coming back.
Chris, it is great to be here again. The two quick short comments. One is I'm amazed every year. You guys do such a great job. That last panel, I think, was indicative of the caliber of people and the caliber of conversation. So congrats. The second thing I think it's worth noting, it is good to see you again. It's been a year. And in some ways, I think it's just interesting to think about how much has changed in that year. And in some ways, as I think we'll probably discuss in our discussion today, it's amazing in some ways how little has changed. And I particularly think about some of the regulatory stuff here in the United States when I say that. But it's great to be back. Great to see you again. And thanks for hosting me.
Well, this is great. Well, I think you're already kicking off a good sort of line of conversation. I mean, a year ago, When we were here in Washington, D.C., we were talking a little bit about Ripple's move to our nation's capital. And as you said, there's certainly been a lot that has changed. And then there's obviously been a good deal that hasn't. Obviously, the coronavirus has impacted everyone here in the city and around the world. But besides sort of that particular exogenous event, I mean, what have you learned and seen about Washington? You're getting to the regulatory issues that you may not have either learned or known or fully appreciated, and what has sort of struck you to be the most sort of memorable aspect of this last year?
That's to get that last part kind of caught me thinking the most memorable aspect. I might have to think on that for a minute, but you know, the thing I probably learned, I think Silicon Valley in general has had a deserved reputation of being kind of late and engaging in Washington. And I think in some ways, the crypto community in Washington, you know, hasn't been as active. And I think as we, Ripple, certainly have gotten more active, I've definitely learned some things. And in some ways, I've learned that the US, from a regulatory point of view and from a legislative point of view, is very open to new technologies, is very open to how these technologies can be applied to benefit real people. You know, not just the trading, not just the speculation, but actually how do we apply these in a way that actually can benefit people? And certainly that's been true for Ripple. I've also, I suppose, you know, to be fair and maybe a little glass half empty, the wheels of legislative process and even regulatory process move quite slowly. And, you know, it's been 2.5 years since, you know, Bitcoin was declared not a security and Ether was declared not a security. And yet, other than, you know, some enforcement actions on the, you know, more, I'll call abusive side, you know, we still have a lack of clarity, and there's lots of examples of that we can talk about.
Yeah, you know, just from a culture standpoint, you know, well, certainly, I guess we haven't been traveling quite as much as we used to. I mean, but is there something that you see in terms of just the cultural makeup and backup of the two cities that has been interesting when it comes to how one talks about, you know, cryptocurrencies, CBDCs, blockchain infrastructures, and the like? I've always made the joke that, you know, when it comes to crypto, Silicon Valley makes it, New York trades it, and DC regulates it, and they all have problems sort of talking to one another. I mean, you know, is there something about it that you've seen, and it plays itself out either in the regulatory process or in California out when it comes to the market sort of design process?
Look, I've been, you know, over the course of the last year, in the last couple of years, I've been kind of outspoken on some of these points. You know, I've been in Silicon Valley for 20 plus years, and I've been, you know, I think part of the fabric of the evolution of the internet. And, you know, it's interesting to me sometimes that the Silicon Valley community, sometimes I don't think fully appreciates some of the things it could do better. You know, expressions like move fast and break stuff, or, you know, even Uber's approach at times, you know, I don't find that to be as constructive as it could be. And I think that has informed, that has created a culture at Ripple of, you know, we have very specifically tried not to be, quote, disruptors, but rather, how do we be constructive? How do we work with the system? How do we work with regulators? And that has really paid dividends for us in many countries around the world. And I think that we have seen, you know, an incredibly positive reaction, incredibly positive engagement from regulators around the world. But, you know, as we've already talked about, you know, in the US, you know, I think it was last week or the week before, the Department of Justice put out a 70+ page paper about some dynamics in crypto. And, you know, in the document, it references 8 different groups within the U.S. government that have some sort of opinion about, you know, how crypto should be viewed, how crypto should be regulated. And, you know, the challenge is for companies operating here in the United States, it's really hard to know. You can't have regulation. It's a guessing game. We Ripple take it very seriously. We take the KYC requirements, BSA requirements, AML requirements very seriously. But when regulation is a guessing game and you have different parts of the government saying different things, that makes it really hard to operate here in the United States. You know, we've, I suppose, made some headlines over the course of the last week, you know, about should we continue to be based, should Ripple, the company, continue to be based here in the United States?
I was about to get into that. Yeah, exactly.
And, you know, Look, I'm a U.S. citizen. I grew up in Kansas. Ripple's a proud U.S. company for sure. But, we find ourselves in this situation where it's not a level playing field for what Ripple is doing in the XRP community is doing. It's really not a level playing field. And that I have to, think about that implication, for the company.
Okay, so let's sort of think a little bit more concretely about that and sort of the international dimensions of, whenever you're working in digital finance is very often a cross-border business, right? You have people either moving money from one country to the other. Sometimes talent can be distributed across different kinds of locations. And so business plans are inherently, international, something that we've already talked about at length earlier today. Maybe you could just sort of walk us through a little bit from your seat at the top of Ripple, what that looks like in practice. I mean, you had made some very interesting remarks about China. We talked about China with our earlier leaders panel from government, and you had noted not just the regulatory sort of challenge in the United States in terms of there being a very sort of heterogeneous sort of mixture of regulators, but you were also noting from a technology standpoint just how advanced some countries were becoming, especially as it turns or as it relates to crypto. What does that mean for a company like yours that's working really at the sort of cutting edge of digital finance? I mean, what does it mean in terms of the friction and the choices that not just Ripple, but really any company that's dynamic has when trying to decide where to do business, how to do business, and what kind of cost reward trade-off is in that mix?
Right. So I think, like any investment, you think about how do I maximize potential upside, but minimize risk. And I think that when you have certainty and you know how to invest, then that minimizes some level of risk. Your earlier panel was talking a lot about China. I love the Book of Genesis reference. The way I think about the China dynamic, it's not that I disagreed with the panelists, it's that I think about it a little bit more broadly. It's not just about CBDCs. When I think about this, China has been incredibly strategic. When they look at crypto and they look at blockchain, they've been very strategic. Premier Xi has actually come out and said, blockchain investment is, a critical priority. And, they have made huge progress on the CBDC, just airdropping, 10 million of their digital yuan to citizens in Shenzhen. It's like they are making real progress here. And I know that the previous panel, I think fairly kind of says, well, look, it's not really about who's first. It's about how does it mesh well. But we got to also remember, it's not just what China has been doing to the CBDC. Today we sometimes gloss over the fact that there is risk, and we talk about centralized and decentralized in these various technologies. Bitcoin mining is 65 to 75% controlled by Chinese miners, and I think it's hard not to argue that the Chinese Communist Party does not have the opportunity to have control there. I'll take kind of I suppose, alarmist point of view, but what happens if Premier Xi loses $1 million in Bitcoin? You don't think that the Chinese Communist Party has the opportunity to affect a change to the Bitcoin blockchain and make a reverse Premier Xi's $1 million loss of Bitcoin that might have been hacked? So I think that's true for Bitcoin, that's true for ETH. That's of course leaving aside the massive energy dynamics and pollution dynamics what we see with Bitcoin and ETH. But it's concerning to me that we here in the United States have given those technologies an advantage. And it goes back to the certainty of the investment you're asking about. Just last week, I was speaking with a developer here in San Francisco, and he was talking about investing and building upon ETH as a development platform. And one of the reasons he cited is, look, there's certainty and clarity about the regulation around ETH. So would I invest in or build upon a different stack when there's not certainty? That's a real issue. And I think you see governments like the UK, like Singapore, like Japan, the UAE, or even Switzerland. These are all really good examples where regulation has provided the clarity of the regulation has provided the ability for a healthy market to develop in a holistic view. And that, I think, helps, companies like Ripple, companies that, want to invest in this space.
When you think about the amount of development in crypto, I think that a lot of people, when it comes to national competitiveness, will think, well, one country, this is a new technology, so the barriers to entry are low enough that perhaps it's, countries can play catch up. Better than almost anyone, what it takes to be a cutting edge actor in this space. When you think about sort of the competition within, again, not just CBDC, but really crypto and even blockchain writ large, and supporting softwares and digital infrastructures, I mean, how accurate is that? How easy or hard is it for an entrant to play catch up and to be competitive? What does that usually take?
I think it's a really important and good question. I think it kind of, as came up in your earlier panel in the context of, is it important to be first or important to get it right? And where there are not network effects, where there are not kind of effects that are kind of the flywheel, then I totally agree that whether you're first, whether you're second, whether you're 10th, the ability to play catch up, I think, no big deal. There are dynamics, though, that kind of what I'll loosely call network effects, where the liquidity of an asset, right? So the fact that Bitcoin is the most liquid digital asset is a good thing. And once you have that, that's helpful to the Bitcoin community. Look, by the way, as much as I get accused of being, anti-Bitcoin, I own Bitcoin. I'm bullish on Bitcoin for sure. So I think that it's important to understand that those advantages that can start because of an uneven playing field, it's not just, okay, now we're going to level the playing field and it's going to reset to normal. The longer those advantages are in place, the more the competitive dynamics and almost the moats are created. And I think that's hard to overcome. And I think that's where I think China is looking at a very long, not just a decade out, but maybe a century out, and making sure that, look, these underlying technologies really are going to be the underpinnings of the Internet of Value. And it's going to change the way transactions around cross-border money movement works, certainly where Ripple is focused, but it's going to change how other transactions work as well. And I think China is being very smart and very strategic by investing in this and by having a very significant stake in it. And I think it's going to be a challenge just to, hey, the U.S. now has a level playing field with these other technologies. And I'm not even just talking about, how that benefits the XRP community, but others that are doing interesting things that are being responsible players and working with regulators that I think, all we're asking for is that level playing field.
It's really an interesting and important conversation. I mean, China is their approach is not only domestic, but they do have and have thought about how do you create sort of a digital infrastructure overseas. There's been a longstanding conversation about the internationalization of its currency, and it's interesting how those kinds of things intersect with how they build out their money. I mean, have you been struck by just how much in this last year, since we last talked at Fintech Week, how much that CBDC conversation has taken off, and what do developments in those pockets of the ecosystem mean for Ripple and for XRP?
Well, I have been impressed and frankly even surprised. I have commented publicly. I was at Davos World Economic Forum event this past February or January, I guess, in Davos. And I remember one of the first comments I got when I was there. I was walking down some stairs, and a regular from another country walked by. I was like, "Oh, nice to see you." And his comment to me was, crypto is still a bad word here. And I thought, that's interesting. I mean, tough way to start the conference. But What's interesting is today, what we have seen and the conversations Ripple is having with various central banks around the world is about 70% of central banks are really looking seriously at this technology. And so I think that is indicative of how that world is changing. Now, that being said, that definitely, I think, is a constructive thing for Ripple and for the XRP community. Just having a central bank issued digital currency still does not solve the dynamic of needing to settle a transaction, settle a payment between the Argentinian peso and the Australian dollar. Having really simple transaction dynamics, both on the messaging and on the liquidity, is still critical to make that work to really enable the internet of value. We think about and we talk about. So I actually see it in some of the work we are doing with central banks around the world. I think it's a very positive dynamic. And look, I think it's still unclear to me exactly how central bank issued digital currencies. Your last panel talked about this. What problems are they solving? Is it circumvention of some of the existing commercial banking infrastructure? How do those dynamics play out? Look, I don't know. What I do know is regardless of how that plays out, you still need a lot of, you need a neutral asset that doesn't carry that baggage as a central bank issued digital asset. And XRP as extremely efficient on the speed, extremely efficient on the cost per transaction, and the scalability is really well suited to help solve that, which is why Ripple has invested where we have.
Tying all that together, tying it together with your original question of the competitiveness of the United States and sort of business and strategic decisions that you have to make every day. And then against the backdrop of what has changed dramatically since we last talked, the COVID-19 pandemic. I mean, what has or how has the coronavirus pandemic, how has it impacted your business strategy, as the leader of Ripple, and what are you looking at, and what should we be looking at in the next 12 months from you?
Yeah. So look, I think there's no doubt the pandemic has impacted lots of parts of the economy, and certainly it has impacted Ripple. And in some ways, it's impacted us in a very, very positive way. And in some way, it's made our jobs harder. At the core, a big part of what Ripple does is, we sell financial technology. We sell that underlying kind of plumbing to financial institutions, banks, payment providers. And, that certainly, we continue to sign up a lot of new customers, and still averaging kind of, about 2 a week, which is great. But, that is a little bit slower than we were at the beginning of the year in January. And, that is a lot because if you can't show up to the Bank of Chris and the Bank of, Fintech Week or whatever we want to call it, it makes the sales process a little higher friction. Now, on the other hand, the dynamics of the pandemic have highlighted some of the huge gaps in our financial infrastructure. From moving from cash to digital, and I think it highlights how some of the unbanked and underbanked have been left behind by what's happening globally. And so that, coupled with massive inflation of fiat currencies, that's really good for the crypto industry at large. It's not at all a surprise to me to see that the broader crypto market overall, according to the sources I think you and I both looked at, it's up somewhere around 90% this year. And I'm pretty bullish about what the next year or 2 or 3 looks like for the crypto market at large. And that's largely because when you print as much fiat stimulus, fiat currencies as we're seeing globally, that will lead to inflation. It does devalue those fiat currencies. And so I think you obviously gold doing very well, you see crypto doing very well, and I think that'll continue to be the case.
We only have a minute or 2 left, but I did want to, when we were talking about the different cultures of the East Coast and the West Coast, and you're talking about financial inclusion, one of the things that I did notice, and I've been, which certainly has caught my eye, is that Ripple's been a little bit ahead of the game, particularly when it comes to conversations on diversity, and actually called out pretty explicitly Ripple's intent to diversify its board. From people here on the East Coast, maybe in Washington, D.C. and in New York, this sounds a lot like something that's not just sort of morally justified, but pretty good business. But why, has it been harder to have that conversation, culture-wise in Silicon Valley, and just wrapping things up. I mean, what made you feel like this was the right call and worth making sense when you're sitting here navigating CBDCs and cross-border payments and competitiveness of the United States and regulatory issues and the like?
Chris, I'm glad you asked about this. As I mentioned earlier, I've been out in this part of the world for 20 plus years. I've seen the tech community kind of go through a number of different undulations. And the thing I feel very strong and kind of very deeply as I think about the Ripple culture is I think we have actually an obligation to lean in. I think we have an obligation to be a part of the solution for some of the macro problems we see. And, I think that the saddest part of that for me is I see tech companies that I think have, if not, well, at best, they've exacerbated some of those problems. And so we have, I think, from the origins of the company, tried to lean into that. One example I'll give real quickly, and I know we're running out of time here, is, we made a big announcement recently about going carbon neutral and making sure the XRP ledger is carbon neutral. And, at the same time we're making those announcements, I find it interesting that Square is out there exclusively supporting Bitcoin, which, again, I think let's remind ourselves, Bitcoin mining consumes 1% of global energy consumption. Wow. How can a company, and I think all of us at our corporate environments, I think Square should be thinking about what is the carbon footprint of that decision. Now, I happen to know that one of the reasons why Square looks at that way is because there is regulatory certainty about Bitcoin. And as we look at other companies looking in this space, they look at what is the regulatory certainty. And so it's ironic, in my opinion, the US has made decisions which are actually exacerbating things like global warming by virtue of supporting this heavily mining intensive stuff. Anyway, I know I'm a little bit off your core question. Suffice it to say, Ripple has and will continue to invest in making sure we have diversity at all levels of the company. We've been really fortunate to have some fantastic women on the board. We did join the recent pledge to add a person of color to the board of directors, and we are working on that very actively right now, and hope to have an announcement soon.
Well, congratulations, and thank you so very much for your time, Brad, both from last year and also showing up again this year. It's really interesting, and as always, I learned a lot.
Chris, thanks for having me again. Hope to see you next year.
Absolutely.
My name is Marco Dell'Erba. I'm an assistant professor at the University of Zurich and a fellow at New York University School of Law. This paper is Crypto Shadow Banking as part of a broader project on the transformative stages of capitalism. And the key question is whether crypto finance is leading to a revolution or an evolution. Shadow banking has contributed to the financial crisis of 2008. And after that, there was a regulatory reaction